The Obama administration wants banks to give home loans to more people, even if they have weak credit. But skeptics warn it could open the door to the same risky lending that caused the housing crash in 2008. CBS News contributor and analyst Mellody Hobson is with us from Chicago. All right, Mellody, why are they doing this, the Obama administration, and is it a slippery slope?
So I talked to a senior official yesterday, and they made it clear that they think the pendulum has swung way too far. We went from a situation where if you could spell your name right, you could get a mortgage, to a situation now where if you have decent credit, you cannot get a mortgage. They've zeroed in on one number. That is the last 5 years, 90% of people with FICO scores between 630 and 680 have not been able to get a mortgage.
So it's become harder, though, to get a loan from the bank these days. How come?
Well, okay, the bankers say we've been the whipping boy for this whole financial crisis because of those subprime mortgages. They say the regulations are way more stringent. All of them haven't even been written. They can't slice and dice those mortgages up the way they used to be able to and sell them on Wall Street. They have to hold them on their books, so they don't want any bad mortgages. And last but not least, they're really concerned that the federally sponsored organizations like Fannie Mae and Freddie Mac and the Federal Housing Authority will force them to buy back mortgages that aren't technically perfect. So they want to write perfect mortgages.
So what are the regulations?
Well, that's the problem. We don't know what all the regulations are. Some of them have been set, some of them haven't. And so there's this regulatory risk of not knowing what the rules are. And again, that's what's making the banks so risk averse.
All right, Mellody Hobson, good to see you. Thank you.